After the European Central Bank's interest rate cut, the focus now shifts to the US Fed Reserve's policy decision. With its meeting beginning today, markets have already priced in a 0.25% rate reduction. However, the US dollar is showing no signs of a weakening. The reason lies in the uncertain economic outlook for 2025. In times of uncertainty, the greenback tends to take the lead as it's considered the most reliable and lucrative currency. Let's take a close look at the economic reports due on December 17 and examine how they may affect the currency market. You are watching Traders Calendar. It looks like today will not be the best day for the British pound. At least the labour market forecasts are far from optimistic. The number of people in work in the UK is estimated to have fallen by 120,000 in October from a year ago, erasing the previous gain of 220,000. Such a sharp decline will undoubtedly have a negative impact on the economy and the one on the national currency. Germany's economic growth has been on a downward trend lately, with some experts already referring to its stagnation, a situation where economic growth slows and the key indicators such as the consumer demand and production also decline. The Business Climate Index for December is expected to fall from 85.7 to 85 points. If the forecast is confirmed, the euro could suffer losses. However, the economic sentiment indicator for the euro area to be released later may show a slight increase of a half a point. Although modest, this growth could help the euro avoid a sharp decline. Notably, a similar report for Germany suggests a near doubling of the index, rising from 7.4 to 13 points. Given that the December data is preliminary, this optimism is quite striking. Against the backdrop, the euro has every chance of reversing early losses against the US dollar. Another currency from the dollar basket could follow suit. If Canada's November inflation rate rises from 2% to 2.2, the Canadian dollar could strengthen slightly. Given that the Bank of Canada has already delivered five rate cuts over the past year, bringing the benchmark rate to 3.25%, a rise in inflation could signal a potential pause in further monetary easing. Either way, the Canadian dollar will likely have its moment in the spotlight on this day. Tuesday's US economic data is expected to be exceptionally strong. For example, retail sales are forecast to have risen by 3.8% in November. This figure is not only impressive on its own, but also a clear indicator of a strong US economy and, of course, a strong dollar. Forecasts for industrial production are also positive. On an annual basis, US industrial production is expected to inch up by 0.1% after falling by 0.3% a month ago. And this could boost demand for the US dollar, which is likely to welcome Wednesday and the Fed Reserve statement on a high note. Please note that the publication times are set in a GMT +3. The next video review of our traders calendar will be released on Tuesday, December 17. We wish you profitable trading and see you soon.